Welcome back. If you recall the other day, we spoke about the divergence between the S&P 500 and Bitcoin. Typically, these two markets tend to move more or less in the same direction on a risk-on or risk-off basis. However, at times, one market may tend to move to a greater extent than the other in a particular direction. Now, the blue line here shows us Bitcoin. The white histogram bar shows the level of divergence. It measures the rate of change over 30 days that each market experiences. So for example, right now we see that the divergence is roughly at a positive 20% level, which means, roughly speaking, that over the past 30 days, Bitcoin has outperformed the S&P 500 by around 20%. Now you'll see, going back to around August of last year, the Bitcoin S&P 500 divergence really doesn't break above the 20% level, nor does it usually break below the negative 20% level. These two markets tend to move in the same direction, but the divergence between the two can represent an opportunity. So let's take a look at the performance. Now, we use the x-axis over here. We're at a 20% positive divergence level. The red histogram bars show us that over the next 20 days, the maximum performance that Bitcoin tends to experience when there already is a positive 20% level is around 20% to the upside, or I'm sorry, about 15% to the upside. The y-axis on the right-hand side shows us the Bitcoin performance. And conversely, on the left-hand side, we tend to see the blue histogram bars show us over the next 20 days the best that the S&P 500 tends to do. And that is usually a negative at this point, meaning that when we're at a 20% divergence to the upside, Bitcoin tends to outperform the S&P 500. Now, this, of course, includes up markets and down markets. So lately, the stock market's been weak. The stock market, under these conditions, statistically speaking, tends to go down more than Bitcoin. So if we're running some sort of either an arbitrage strategy or we just want to buy and sell both markets, Bitcoin and the S&P 500, the data suggests that Bitcoin at this level tends to move up higher, and or the S&P 500 tends to move down to a greater extent. Conversely, if we see that the Bitcoin S&P 500 divergence level is at a negative territory, for example, negative 25%, usually the S&P 500 tends to perform better under those conditions. Fast forward to present day, and the blue line represents Bitcoin, and the divergence histogram bars are shown in black over here. And we can see the other day we spoke, we had a divergence level of around 20%. It's actually now dropped back down to around 15%. Now, it's still to the positive side, but we're starting to see regression to the mean, which again is usually what happens as we see a regression to the mean. So now, while the S&P 500 has gone down and Bitcoin has gone down, we tend to expect that both of these markets are going to return towards the center of their trading ranges. And again, present day shows us S&P 500 in blue, Bitcoin in yellow. We can see that over the past couple of days, it looks, at least based on this chart, the S&P 500 has moved down to a greater extent than Bitcoin has in the same period of time. Now, on a day-to-day basis, this may not present to us a concrete trading strategy. I don't think that the data maybe is best used in that respect. But when we look back and we see that we're at an extended point, so for example, at the 20% level, well, and we expect negative markets, I would expect, based on this data, for the stock market, for the S&P 500 to go down at a greater extent than Bitcoin would. Conversely, if we're optimistic about the market, if we think that the stocks and cryptocurrencies are going to go up, my best guess, based on this data, is Bitcoin would be a better buy at that point, based on this data. And finally, one note over here. Notice this relationship does break down when we see very extended conditions. So, for example, if we see that Bitcoin is outperforming the S&P 500 by a rate of 60, 70, 80%, then truly Bitcoin is really overbought. So, like any other market, a strong market tends to trend higher, but only to an extent. Now, I don't think that we're necessarily at that point yet, but we see here that we are in a trading range in terms of the divergence levels. And when we start to see a divergence around the 20% level, that's really the most we've seen lately. Of course, this can always change if there's stock specific or cryptocurrency specific news. That can disjoint this relationship. But as long as that doesn't happen, the divergence between these two markets is something that the data suggests is pretty consistent. We hope this has been helpful. We look forward to seeing you back soon.